give us an overview of the 5-step framework from your book, Stress Less and Prosper More?
Sure, with pleasure. So the framework is based on an acronym. The acronym is PEACE. That's PEACE. And when it comes, for example, to investing, so investing is not just about dollars and data. Investing is also about your inner, your mindset, your attitudes towards investing. And, I say in the book, and I truly believe this, there is nothing that you can do in a state of fear that you cannot do better in a state of calm, right? Nothing. And that includes investing, because investing, there are many significant decisions that a person has to make where they deploy their capital. And if you're not at peace inside, you are not going to be able to make the optimal decisions and approach things with optimal creativity than if you're calm. So the peace system is really 5 areas where one can focus on in order to improve a person's calm and not be under the guise of anxiety and fear. So the P in peace, PEAC, the P stands for positive thinking. And positive thinking is about, if we're negative, and we have a bias towards negativity as human beings, when we are negative, that negativity attracts and can become a self-fulfilling prophecy. But when we are positive, that can also become a self-fulfilling prophecy. There was a scientist in England. His name was Dr. Wiseman, and he did a fascinating experiment. He divided the subjects of his study into 2 groups. One group considered themselves lucky and fortunate. They considered themselves they had a very positive outlook on life. They were optimistic about the future. And the other group was the opposite. They were pessimistic about the future. They figured that nothing ever fortunate happened to them. So, and then what he did is, as they left the place where the study took place, he left some money, some cash lying on the floor. And it was statistically more significant. The group that felt optimistic about the future was statistically more likely to spot the cash lying on the floor. So you make your own luck, you make your own fortune through being brave, I think you would say, and through being optimistic. So the P stands for positive thinking. The E stands for embracing challenge. The A stands for appreciation or gratitude. The next C stands for certainty and confidence. And the final E stands for empathy. So these 5 steps are the basis of Stress Less, Prosper More, and the basis of this framework or system that I developed to help conquer fear and invite abundance into your life.
What advice would you give entrepreneurs that are seeking funding in this way, and they feel they have an impact, to provide, to offer, especially those from any other, all backgrounds, not just one in particular? What advice would you give entrepreneurs seeking funding in this way?
I think matching the thesis is very important. The entrepreneurs need to understand what really drives the VC to invest. Each VC, they're different. It could be strategic. It could be corporate venture capital arm of a big corporation. It could be private VCs. Understanding each VC firm on how to make the investment decision is really key. Align with the thesis and align with the goal. So when you talk to them, you know exactly this is what they are looking for. Okay. When I hear the pitch, people talk about impact, but I want to be very clear. It is not impact first. Impact is the criteria that, if you have an impact, I would consider investing. But whether or not I'm going to write a check and whether or not I'm going to really invest, obviously I'm going to look at the business model and the potential returns of the funds, because I have the investors in the funds who are pure financial return people. And the reason they invest because they demand financial return, right?
Right.
So, and different funds are different. I like to talk to the entrepreneurs in a way that here is the strategic return, here's the impact return, and here's the financial returns. And then we have a deal.
What was it that made you stay so disciplined? I mean, you said I vowed to never go back, right? What was it that allowed you to just stay the course and pivot and learn and do all the things that you needed to do so that you didn't succumb to whatever was presenting itself?
I'm not sure if you could see this tattoo on my hand. It's kind of faded and jaded, but what it does say, it says never again. That's 12/13/05, right? And one of the things that I've learned in life is that you can lie to anybody, but you can't lie to yourself. You know, you're the one person that you have to be honest with. And I knew nothing else. Nothing would be more terrible, would be worse for me than actually having to tuck my tail between my legs and go fill out an application at for a 9 to 5 and let somebody else decide what my destiny was going to be. So I was gonna have to let somebody else decide what time I woke up, what time I went to lunch, when could I go on vacation. I would have to ask for permission for just basic simple things. Can I go pick up my daughter from work? And that's not can I go pick up my daughter from school? And that's not the life that I wanted to lead. So I chose my heart. I chose my heart because it was going to be difficult. It was going to be difficult to wake up every day and grind it out and get in, it was going to be difficult to grind it out every day, find deals, work the deals, go through whatever BS I had to go through with the deals, whether it was dealing with contractors, dealing with neighbors, dealing with the city, dealing with shiesty brokers, dealing with aggressive lawyers, whoever I had to deal with, and whatever obstacle that would face the front of me, I viewed that as a lesser evil than having to get up and go to work and let somebody else decide my destiny.
Yeah. And so that basically fueled you. That is beautiful. Thank you for sharing that, because that fueled you to find the knowledge, find the information that you needed to make the decisions you had to make to keep going no matter what.
It was based. It was.
So many people call us, hey, where's the best market to invest in? I'm like, that's like saying to me, hey, listen, I need to go buy some sports shoes, but I don't know what game I'm going to play. I don't know whether I should buy, soccer shoes, basketball shoes, tennis shoes, whatever it is. And I'm like, listen, we have to start with why you really want to do this. We can figure out the returns later, right? We can figure out because returns are returns. I mean, if you really look at a lot of deals, to be honest, Mary, and I know that you guys see a lot of deals, the returns are a lot of times very similar. It's not a lot. They're not a whole hell of a lot different, And so it's a matter of saying, okay, why would I rather have a duplex or warehouse space or a short-term rental? Like what are the other intangible assets or tangible sometimes when it's personal use and short-term rentals that we can tap into of those benefits?
Yeah. That's a differentiator. That's what differentiates you. So a lot of people talk about, your brand or, some of the other terms that they might, your positioning in your business or anything like that. But what you just described is actually differentiating yourself. So no one's going to be able to compare you to someone else who might offer short-term rentals because of what you just talked about, because it has a why behind it. And like I was talking about with your innovation, I don't think of innovation like the Steve Jobs and the Elon Musks of the world, right? We all innovate. So with your innovation and your why, there's no one on earth that has both of those things like you do.
Right.
They're different for each of us. So there's really no comparison, right?
Yeah. Yeah. You're playing in a category of one, and that's what you want.
Right. That's right.
Right? There's no reason to regurgitate what everybody else is saying, because at the end of the day, numbers are numbers. asset classes are asset classes. If you really understand why you're doing it, how to really maximize whatever you're going to be doing. I mean, it's important to understand what you need to do to maximize and optimize different deals and really recognize the opportunities. But when you do and you're confident about it, you don't need to show off your fancy cars or your gold chains or anything like that. People resonate with, here's the thing that I really believe right now, Mary, is I believe there's a trust recession, and you better believe it if you're trying to raise money that there's a trust recession. And because there's so much stuff online with AI and everything that's written by ChatGPT on the marketing side that people are just over it, right? And they're like, hey, listen, I don't know what to believe, what not to believe. And if you, like we specifically, I tell my content managers and our marketing experts, I say, listen, I don't want my stuff chopped up. I don't want it edited. If I screw up, leave it in there. Yeah. Like I want people to know that this is just us, right? This is how we operate. And we do a ton of live events right now. I think it's really important to get in front of people, talk to people so that they can ask you questions and get a feel for what you're doing. But it's because of that trust recession out there, it's really, really important to start to connect with people. And then, but also it forces you to level up too, because you can't just rely on, a prompt in ChatGPT to give you the best marketing letter. Not that those tools cannot save you time and everything else. I'm not saying that you completely don't do it. But what happens is when you're putting that stuff in there, so is everybody else. So guess what? You just blend into the crowd. You become another commodity. You become the next person that's DMing somebody to raise money or buy a deal or whatever else, because everybody's using the same prompts. Everybody's using the same the input's the same, the output's the same. It's all the same machine, right? And so just trying to say, hey, listen, just dive in and be yourself. And don't worry about if you heard Sean talk or Mary talk or anybody else for that matter talk. Don't try to be like them. You just operate in a category of one, and because that's what people are going to be resonated with. And I learned that probably about 8 years ago. And it took me a while to learn. I'm 48 now. So I was probably about 40 years old before I really realized that, because I just wanted to always try to be like somebody that was more successful. Right. And I wanted to kind of copy or emulate or do what they were doing. And when I started realizing, hey, I'm just going to be me. That's when people actually are attracted to you.
That's right.
That one house, that one turnaround can make such a huge difference. It can be the momentum that can help the rest of that community improve. And think about the families that are affected, the lives. It's super exciting for us to be able to give people, the vision, help them get the vision and the excitement to do it. And then the mechanisms to be able to use to actually make that dream a reality.
Why is policy and partnerships and local collaboration, why do those three things together matter as much as capital to help people have access to ownership?
The government tends to try to do its best to protect us in many ways. And for the most part, I tell myself at least that it's very well-meaning.
I think we all know what you mean. Yes.
That's the story I tell myself is that they mean well, they really do, but they don't understand the reality of life. And so one of the biggest challenges with Reg D was the accredited investor piece. And like I said, a lot of people who could easily participate in the kind of sharing of equity and the sharing of the debt that leads to that, they could participate, they could easily participate, and it would be comfortable, but they would have never passed all of the cutoffs to be able to be considered an accredited investor. Before that, community was the only way to be able to put people together, and small communities and local communities. I believe in this age of being able to have a community not just be local. A community can be global, and you can share the information. Here's the other reason that's important. Everybody has different strengths and weaknesses. And so you can bring together people that have different perspectives and different strengths into that real estate opportunity, and they will give you a better perspective on the deal and a stronger deal because they can all bring different things to it. And having someone on the ground who is familiar with that local area, because one side of the street could be different than the other side. It used to be just pockets, but it can be, at least locally here for us, it can be very different in terms of taxes, in terms of livability, in terms of employment and access to transportation for that area. So all of those things, having the local information and flavor and knowing how that is in a community, that person may not be bringing a ton of money to the deal, but the experience and the information that they can bring is very important. And so having different people have different roles and different input can really build that community so that the investment is safer. So some of the things that the government is trying to protect us from, we can protect ourselves from by having access to each other and to each other's information and wisdom and how long have you been in this game. And one of the things that we say is the further we get away from 2008, the scarier it gets for me, because investors in this market have only seen up. Yeah. They've only ever seen up. They've seen maybe a blip here, a blip there, but they've never seen down. And before that, about every 10 years, we had a dip and a decently significant dip. And so you didn't have to be in the real estate community for longer than about 10 years to be able to see what those market rhythms looked like and to see how things happen, the warning signs, and how you got through the tough part and got to the other side. Because we have been so long straight up, I think it's difficult. It will be difficult because there will be a blip. I mean, you just can't, markets can't sustain forever. It just can't. It's not on a straight up trajectory. So there will be a blip. And if you've never seen it, and you never had to live through it, and you never had to deal with finding resources and making things work in different ways, I think it's going to be challenging for some of those investors. But if you're in a community, and inside that community, you've got individuals that have lived through worse, that have seen a little bit of everything, it brings so much stability to the community because they're able to think in different ways. And that experience really does have just a huge value. So all of those things, I think, contribute and are important. When you're a lone wolf investor, you may have some speed and you may be able to, bob and weave a little bit, but you don't have the grounding. You don't have the support.
Did this episode help you tackle a mindset shift? Leave us a review on Apple Podcasts. Your feedback can provide actionable solutions to others seeking access to opportunity.